In today's episode, I'm gonna show you one of the common problems in trading world. See, most traders out there wait for a pullback after a trendline breakout. That is actually a solid approach in price action trading, but there is a problem. Sometimes the market continues without giving a pullback entry opportunity. While everyone else is waiting for the perfect retest, the market has already delivered hundreds of pips. But what if I told you there is a way to enter these breakouts without chasing price, without increasing your risk, and potentially maintain a powerful risk-reward ratio?
What?
So I'm going to reveal one of my personal price action strategies that I've used for years. It is a setup I rarely see traders talking about, and honestly, most traders don't even know it exists. So how to enter a breakout when there is no pullback. You stay until the end because I genuinely believe this is going to be one of the most valuable price action videos you have ever watched. Now before I show you this strategy, let's dive deep into the problem first. Most traders are taught to wait for a trendline breakout and then enter on the pullback. That is a correct approach when trading the breakouts. The issue is that market doesn't always give us the second chance. Sometimes momentum is so strong that after the breakout, price just keeps moving and it happens with no pullback, no retest, no clean entry. As traders, we have two choices: either sit there and watch the move happen without doing anything,
Here I come. Oh, here I come.
or chase the market and destroy our risk reward. Neither option is ideal. So let me show you the exact technique I use. This technique is called the external pullback setup. Let me walk you through the criteria for a long trade. First, imagine the market is in a downtrend. To identify the direction of the trend, we can draw a trend line connecting the lower highs. The setup begins when price breaks above that trend line, signaling that bearish momentum may be weakening. At this stage, we don't know whether the market will immediately pull back or just continue moving higher, so we need to be prepared for a no pullback scenario. The first thing to do is to identify this significant swing low that price is approaching after the trendline breakout. Mark this area with a box, as it represents the first resistance zone ahead of the price. For the setup to remain valid, the candles must break above the resistance zone. The next step is to identify the next major resistance level in the direction of the move. So candles must also break above this second resistance level. This is important because it confirms that buyers are strong enough to overcome multiple key barriers and that market structure is beginning to shift from bearish to bullish. After the second resistance zone is broken, the trade entry comes when candles retrace back to the breakout zone. Now let me show you how this works on a real chart. In this example, the market is in a downtrend, so I've drawn a trend line to identify the direction of the move. As you can see, price starts moving higher and eventually breaks above the trend line. At this point, there is a possibility that price may not return to retest the trend line, so we need to prepare for no pullback scenario. The next step is to identify the resistance zone in the direction of the move. The first zone could be significant swing low, which I mark with a box. If candles fail to break this level, a pullback becomes more likely. However, if buyers can push through it, we need to continue planning for a no pullback setup. The second resistance zone is this higher swing high, which I also highlight with a box. This is the key level we're interested in because it can become our entry area if price continues advancing without a meaningful retracement. Now watch what happens. Candles rally and break through both resistance zones. So I place a buy order at the second resistance zone. Any pullback to this area can provide a potential long entry. For risk management, I place my stop loss slightly below the first resistance zone, while targeting a risk-reward ratio of around 2 or 3. And as you can see, price continues higher, eventually pulls back to retest the zone, and it triggers our long position. This is actually a better setup than trading the normal pullbacks, because after crossing two major resistance levels, there's possibly a complete momentum shift, and that can increase the win rate of the setup. Now let me show you the bearish version of the external pullback setup. Imagine the market is in a strong uptrend, with price consistently making higher highs and higher lows. To identify the trend, we can draw a trend line connecting the swing lows. After some time, price begins to move lower and eventually breaks below the trend line, signaling a potential shift in momentum. At this point, there is a possibility that price won't return to retest the broken trend line and may simply continue moving lower. We need to identify two key zones in the direction of the move. The first support zone is the significant swing low, which I mark with a box. If candles move below this level, there is a possibility that we are dealing with a no pullback scenario. Next, we identify the second support zone, which is the major swing low that follows the first one. This is the key zone we're interested in because a breakout below it provides a strong confirmation that bearish momentum is taking control. So the process is simple. After the trendline break, if candles continue lower and break through both support zones, we can prepare for a short trade. So we can place a sell order at the second support zone. Any pullback to this area can provide a potential short entry. Now let me show you how this setup works on a real chart. In this example, the market is in an uptrend, and I have drawn a trend line connecting the higher lows to identify the direction of the move. As price starts moving lower, it eventually breaks below the trend line. At this point, we don't know whether the price will pull back or continue falling. That's why we need to be prepared for a no pullback scenario. The first zone I focus on is the significant swing high, and the second zone is the next major swing low below it. So as candles continue lower, it breaks through the first support zone. This is an early sign that a no pullback continuation may be developing. As you can see a little later, the candles break below the second support, and at this stage, bearish momentum has become much stronger, and the market has cleared two major barriers. This gives us the confirmation we're looking for, allowing us to prepare a short position by just placing a sell order. So this was an advanced and a unique trading setup for trading breakouts. Before you leave, I have to tell you that I'm not a financial advisor, and this is not a financial advice. All content, information, and opinions shared in this video are for educational and informational purposes only. Trading involves risk. Consult a professional before making financial decisions.